Mr. Boni Makalinga, Gutadwell, and Charlene. Thank you for joining, everybody. In the interest of time, we are going to start our meeting right now. So thank you for making time to come for this session. It's a very important session, as you're going to find out. So among us, I'd like to recognize the presence of some of our leaders from WMI, starting with Mr. Bonimak Alinga from Uganda. Would you like to say a few words?
Thank you, Dr. Angela. Bonimak is my name, and currently serving as the Community Development Grants Manager with the WMI. A great pleasure for me to be here, listening to my long-term friend, CPA Thomas Sivodza.
Thank you.
Thank you. Thank you, Mr. Bonimak. We are very excited to have you here. Now, I'd like to also have a word from Mr. Isaac, who is also a leader in both MSB as well as WMI.
Okay, thank you very, very much, Angela. And thanks very much to Thomas for accepting to be a speaker for us today. We hope to learn a lot from you. And also thank you to everyone for joining to this session. All right, over to you, Angela.
All right, thank you, Mr. Isaac, Dr. Isaac. I see also an MSB leader present, Mr. Justice, Dr. Justice. Please share a word or two before you can begin this session. Yes, Dr. Justice. All right, so as Dr. Justice prepares to give us a word at the end of the session, I'd like to proceed and talk about why we have gathered here today. Oh, Dr. Justice, yes, please.
Oh, sorry, I didn't know you called me. Hello, everyone. Good afternoon. Good afternoon, and thank you so much for taking our time to join this section. And I also want to thank our speaker for coming up to this platform to educate us about money, medicine, and also financial empowerment. And having gone through his portfolio, I feel is one of the best persons who can actually address this topic.
All right. I don't know if I was the only one that was not able to hear you clearly, but you're a bit breaking up over there, but it's all right. We are going to proceed with the session. So I'd like to start off by talking about why we are here. The topic for the day is money, medicine, and financial empowerment as health professionals. Money and financial advice is not exactly a topic we are taught in school as medics. Okay, personally, in our curriculum, as the Ugandan curriculum, financial empowerment is not exactly something medical school focuses on. So you find our young doctors have tasted some good money for the first few years, and they're squandering it all. So we'd like to have this session with our very good speaker, Mr. Thomas, who is going to take us through something, or he's going to give us some advice on how to financially empower ourselves as medics. So Mr. Thomas has quite a heavy portfolio, I can tell you that for sure. He was carefully handpicked and selected for this session. So Mr. Thomas is a chartered accountant and a CEO of Vasco Consultant Limited. He's also a professionals provider dedicated to SMEs, focusing on audit, business planning, and general Business Advisory. So Mr. Thomas has served as a financial advisor for Provitas Specialist Hospital, and that was the first IVF center in Africa, and all related businesses in that area. The last 3 years to October 2023, he has been the finance manager for Asante Kotoko Sporting Club, one of the largest football clubs in Africa. Like I said, Mr. Thomas has quite the heavy CV. He is also a qualified chartered accountant with certifications from the Institute of Chartered Accountants in Ghana and the Associations of Chartered Certified Accountants. So that's ACCA in brief. He also holds a bachelor's degree he also holds a Bachelor of Science in Business Administration and passed with first class honors from Kwame Nkrumah University of Science and Technology. So without any further rambling or further ado, I'll go ahead and invite Mr. Thomas to take us through the session.
Thank you, Dr. Angela, and good afternoon to all our participants. Yeah, so today we want to look at money, medicine, and financial empowerment. I need to be brief on some of the sessions because we have only 1 hour to go through this. So if you have any question, you can put them in the question session, or you can note them down. There will be a period for us to ask questions and understand. So without much ado, we want to understand the economic meaning of money, why financial empowerment matters. Then we look at the balance sheet of life, what we mean by balance sheets. Then we look at lifestyle and cost control, and then the impact of taxation on income and wealth. So by way of introduction, we are saying that so we say financial literacy is broad and impacts everyone. And it is essential that we all understand it. Yes. So it doesn't matter what profession you are in, you need to have an understanding of financial literacy. And I think we've done something earlier, and then I feel that today's topic is a build on of what we've done in the past. So we are also saying that medicine saves lives, yes, but financial discipline sustains your life. So we need to make sure you balance the two. Now, there is a direct connection between money and your overall well-being, yes. Your financial status affects your well-being and your mental health. So we need to take notes of that. Society places high expectation on professionals, especially medical practitioners, and this serves as our guiding principle, yes. So once you become a professional, society see you in a certain line, and they place you on the higher extreme. So you should ensure that you maintain that level. Otherwise, same society will affect you. Okay, so the first goal we need to understand here is that we should control money and don't let money control you. So that takes us to our next slide. We want to understand money from the economic perspective, okay? So by definition, money is a medium of exchange used to buy goods and services, pay for needs, and store value for future use, okay? So globally, the world is broad, and then whatever we do, we should find a basis or a common medium where transactions should flow, and that is money. Money help us to be able to transact and then do things. So from the definition, we are saying that money is a resource and everyone needs to have this resource. Okay, it is broad, but there are principles of owning it. And as a professional, you have an upper hand of being able to own this resource. So we are looking at three key functions of money. It's a medium of exchange. Okay, that is, it is used to buy and sell. Okay, so money easily makes us to understand what price you can put on anything. Then it is a store of value. So money keeps value over time. Okay. For example, if you have gold, for you to be able to know that value of the gold after a certain number of years, it is the money you place on it that will let you know the value of that. Then it's a unit of account. Okay. So it say as a unit of account, we say it measures the value of goods and services. Okay. So in economics too, we have two things you need to understand. Okay. We have needs versus wants. Simply put, needs are basic things required for survival
Hello.
and well-being. For
Good
example,
job.
food and shelter.
Ni
Okay.
failure returns.
Then we have wants. So wants are non-essential things
Na kutumia video
that
ingine,
improve comfort
hebu
or
usikie hiyo
lifestyle.
video alafu
For
uone kama
example,
unaweza
luxury,
stahili.
luxury items and entertainment. Yeah. So the needs are the first most important things before wants. Okay. So let's move to the next one. We have so why financial empowerment matters. It matters because training medical practitioners to understand and manage business investment promotes long-term stability. Okay, so that is one reason why financial empowerment matters. High income does not equal wealth. Yes. So we will, ahead of us, when we get to the other sessions, we will understand this better. So we are saying that high income does not equal wealth. So then what is wealth? Because as we said earlier, society plays so much respect to us. And professionals and as medical practitioners, our earning capacity is higher than other forms of employment. So you have high income, but how are you building wealth from that income? Okay. Then we are also saying that financial stress affects clinical performance. Yes. So you shouldn't let it happen because your clinical performance will sustain your earning capacity and then build up. So if you make financial stress affect you, definitely it is going to affect your performance at the workplace. Okay. And then we are also advising that you have to build financial independence early. Yeah. The earlier you start, the better. I think you could even see, make a research and see most of the rich men and the well-to-do people, when they are telling their stories, there is some basic business related activities that they started early in their ages. Some will say, oh, I started by selling kerosene, I started by selling gari, I started by selling. So it gives you some basic skills. Then as you build upon it, you get more experience and then you are able to control bigger assets and then it continue in that order. Okay. Sometimes I meet some people about 5 years to retirement and said, Thomas, I want to do something so that when I go on retirement, I don't want to be dependent. I mean, at that age, 5 years, what can you do? Some may say that, okay, I now want to go and take on additional education to be able to help my earning capacity. It might be too late. And then there are certain mistakes that you may do. When you start early and then you do those mistakes, you are able to correct it quicker. And then those mistakes you do early are so minute that you can overcome quickly. You could think about losing maybe $1,000 at an early stage as compared to losing about $100,000 in a late age. Okay, overcoming $1,000 loss is easier than overcoming $100,000 loss. And by that time, you might not be able to have the strength and ability to be able to generate more. So this point is very key. So we are saying that overall, you must build financial independence alongside your medical career. This is the main focus of this discussion. Okay, let's try to build financial independence. Okay, so in our next slide, we are looking at the balance sheet of life. So a balance sheet in accounting is demonstrated by this equation. Okay, we say A equals E plus L. Assets equal equity plus liabilities. Okay. So now I said this is how accountants measure wealth. You know, we mentioned wealth in our earlier presentation. So we are saying that you need to apply this equation to your personal finances. Okay. Now, if you look at this diagram here, you see the balance sheet equation. Forget about the numbers at the side. Okay. So this whatever balance at one extreme is the assets, and then the other extreme carries the equity plus liabilities. Okay. But the blue equation below, we all are very good in mathematics. So when we change the subject, it means that assets minus liabilities is equal to equity. Yeah. So it's a basic equation that affects businesses and persons. Okay. And as a person, this is what you should put in your mind. Okay. So what assets do you have, and how are you building those assets? Okay. The assets come from equity and then liabilities. Okay, now let's go on. So if you take assets, assets are what you own that adds value. Okay, so assets are what you own that add value. So you can think about savings, you can think about investments. So savings and investment, there is similarity and differences. You should take note. Then we have property. So property could be a vehicle, it could be a building, it could be land. Okay, it could be some valuable assets you have. Then skills. So the skill, say your medical expertise is a major asset. Yes, so accounting will put it as a goodwill, okay, or non-tangible assets. Okay, this number one asset, you could cascade it into a long list. Okay, so you can have tangible assets like property and vehicle, they are tangible. Then you can have intangible assets like the skills is an intangible asset because that is what is helping you to generate money and then add value. So how are you improving the asset of skills to be able to generate more money? We will see that. Okay, so we said that asset puts money in your pocket. So that should be the main focus. Then the second and third, we'll look at how we are financing that. So number two is the liabilities. So liabilities are what takes money from you. Okay, let's understand it that way. So examples of liability will be loans, yes, credit cards, yes, car loans, and then expensive lifestyle habits, please. So we are saying that you can have a savings of maybe 10,000 Ghana cedis in your account. Okay, we can say that 10,000 asset was built by a bank loan that you took from the bank. That is what is there. Okay, so that is one example. And that loan you have to pay back, so it is a liability. It is not for you. So you can also see liability as something that is not for you. You don't own it, okay? But it is representing an asset, okay? Now, we are saying that liabilities take money out of your pocket. So liabilities is an opposite of asset. Now, the third item on the balance sheet is equity. So equity is your true worth. Good. So the wealth that we mentioned earlier is equity. So we should focus on building equity at the other side of the equation. Okay. So we said that equity is what remains after removing debt. Yes. And then it is your net worth. Okay, that is the residual value. So if you draw your balance sheet and then your equity is negative, my friend, you are out. So we said that equity is equal to your financial strength. Yes. So let's look at a practical example. You have a total asset of 100,000. Okay. So out of this assets, your liabilities is 40,000, and then your equity is what? 60,000. Okay. So we say A equals E plus L. Okay. So when we come here, we see that the total asset of 100,000 that you are having, you use 40,000 liabilities to fund it, and then equity of 60,000. It means that, so if you break down the assets, you have maybe a land, 50,000. You have a vehicle, 40,000, and then you have cash at bank, 10,000. Okay, it means that if you pay off your liability of 40,000, then you have an equity of 60,000. This is what it means. Okay, so your lifestyle and cost control. Let's look at focus. We are saying that you should focus on career growth, because that is an asset for you, and is the skill that will increase your revenue generation. Avoid unnecessary expenses. Think about some of the unnecessary expenses that you make. Okay, these are practical, everyday lifestyle things. Okay, you think that, oh, this friend has invited me. You have your own budget, but you get there and then you see that no, you have to spend something that you didn't budget for. It's an unnecessary expenses. So if you avoided that, then you could have also avoided that expense. And then one thing that also do is, for lack of better word, like show off. You see, because you are a medical person, there is a high premium on you. You go to church, then you say that, okay, those of us who are familiar with the church system, maybe appeal for funds, then they start from a higher denomination. They expect that you will go first. But don't also forget that as Christians, we have the principle of giving. So you have the faith that when you give, it multiplies. Maybe for me, I'll go to the period when it is comfortable for me, and then I'll tell God that, God, whatever that I've given you, multiply it in million-fold for me. So if the first session was 100, and then the second one was 50, and then the third one is maybe 30, I could go for the second one, 50. And then tell God that I should multiply it for a million-fold. That is, I'm expecting that the 50 cities I've given, I'm expecting 50 million. You will go and put in the 100 and tell God that I want the double, 200 Ghana. Hey, what are you using this for? Yeah, so those are some of the real lifetime experiences. Then you should live below your income. Yes, it's all about your equation. Okay, whatever monies come in, make sure that for each month you are able to save. Then the next point is also talking about saving. You should start saving early. What I did was that at National Service, I approached an investment bank and then opened an investment account and then place a direct debit or standing order on the account. So whatever money comes, the savings move into the investment account before whatever is left, you spend it. Okay. Then he said diversify investments. So in diversifying investments, you see, there are a lot of investment opportunities around us, but there are very good structures of investments. There are banks and then investment companies that have developed very nice product over the period, and then they have the track record. So don't look too much into very risky ventures. Okay, just focus on your career. The career alone is able to give you enough revenue. Okay, the career alone is able to give you enough wealth. But if you think that you want to start a new business, that is acceptable, but you should be careful that that one will not ruin everything from you. Okay, maybe another time you could find a time to look at how to develop an investment portfolio. Okay, an investment portfolio. A portfolio is just like a pot of various investments. So, what percentage of this are you adding? What percentage of this are you adding? So that we can understand it broadly. It is not something that is limited to only Ghana. It's global. So we could look at the principles and then take it out from there. And then also the last point is that we should think long term. Yes. So if you want to build a house, somebody will be like, hey, if I take a mortgage now, the mortgage is going to take 50% of my salary. But it is now. What about in 5 years' time? Are you going to be receiving the same salary you are receiving today? No, it will increase. Okay, the value of your money increases over years. So if today you are planning a mortgage and you think that the monthly payment will be about 50% of your salary, maybe in about 5 years' time, that same payment becomes maybe 30 or 20% of your salary. So you start it now. In the future, you will be at the laughing end, because at the end of the day, the opportunity cost of the mortgage is the rent you'll be paying. So you are rather funding somebody's mortgage by the rental payment you are paying. So why don't you start early? And then this in mortgage investors and financiers, they are looking for sustainable salary. And one of the people who earn sustainable salary is medical practitioners, because they know that at least so you go on retirement, you are earning salary, and these are the people they are looking for. So even the initial deposit, they will lower it for you and then give it to you. So you do that, and it's far better. And then the value of the asset today might even double by the time you finish. All right. So we move on to our next slide, which is action plan. So our action plan, we are saying that we should invest instead of spending on luxury. Okay. Luxury is a liability. Grow income generating assets. Yes. So one income generating asset can be maybe investments. Okay. And then we have to be tracking your expenses and then be making decisions based on those. Okay. You don't think that, oh, if I spend this one next month, another one will come, next one, another one will come, next one, another one will come. Okay. In our African settings, there are, like I said, there are so much expectations, and then a lot of external pressures are on us. So you need to make sure and plan all of this into your spending. Okay, and then we say invest regularly and stay disciplined. All right. So with that done, I want us to quickly look at the impact of taxation on income and wealth. Okay. So tax, you said that tax is a mandatory payment imposed by a government on individuals and businesses to fund public services and national development, okay, such as roads, healthcare, education, and infrastructure. Yes. So you said what? We should give unto Caesar what belongs unto Caesar. That is it. So you take it that the tax is not part of your money. Whatever that is left is for you, okay? But then because we earn salary as professionals, we earn salaries. This is one of the areas that the tax authorities focus on. And then it's easier for them to collect taxes from professionals because most of professionals are employed, and then the employers will have to deduct these salaries and pay to the tax authorities. It is the responsibility of the employer to make sure that you pay your salary. So at least on the basic principle, that responsibility is taken from you, okay? But let's understand some of the modalities. And then you see, you want good roads, you want security, so that, okay, if I go to work, I close late, I can get to the house peacefully, and then the next day I continue. It is government that will fund that. And how will government fund that? Through taxation. Most governments are not very good into production or in business. Most governments have sold their business, maybe they will build it and then sold it to the private sector to operate. So one key area that they are looking at is taxation. And we should look at taxation as a good tool. Only that we should also demand accountability from our government so that we know that, okay, our roads are good, our healthcare system is good, education is good, and then we have nice infrastructures. Okay, so some key points include taxes reduce your take-home pay, yes, your net income, because that is where you will have your gross salary and then net income. Okay, so we have to be careful. Sometimes you go for an interview, then they will ask that what's your salary expectation. They will ask that what is your salary expectation. So you need to be sure. Are we negotiating gross salary or we are negotiating net salary? At this point, negotiate net salary so that whatever that they will do with gross is up to them, because the net salary is what you take home. That is what gets into your pocket. Then we said that higher taxes equals less disposable income. Disposable income is how much is left for you to buy goods and services. And then also we are saying that taxes reduces amounts available for investment. Yes, some countries charges a flat rate across board, maybe 20% of your salary. So if you take 10,000 Ghana cedis as your gross salary and then your country charges 20% tax, it means you'll be left with only 8,000. In Ghana, we have the graduated scale. So up to a certain amount is 0. The next 5%, the next 10%, the next 17.5%, the next 25%, the next 30%. I'm sure most of medical practitioners in Ghana fall within the last two bands, the 25 and then the 30%. You understand? So you can understand. And then the graduated scale, if you look at it critically, the average amount you pay as tax is about 17%. So you can imagine, even if you decide that you will be investing 10% of your income into it, tax have already taken 17%. You are left with about 83% for you to do all the rest of the things that are left, okay? But then it's good because that money is going into social services that will still come back to you. And there is another aspect of capital gains. Capital gains and property taxes affect asset growth. Okay, so here you can also add gift tax. Okay, if you go into taxation, it's a broad area, and then so capital gains, we are saying that okay, if I bought an asset for 100,000 Ghana cedis, and then I sell it for 120,000 Ghana cedis, I've made a capital gain of 20,000, and then I'm supposed to pay tax on that value appreciation of 20,000. Okay, then we have a gift tax. Gift tax, if somebody gifts you something in Ghana, you have to pay 50% of that. The funny thing is that sometimes that gift somebody, the person have given you, maybe if it's a 1 million, 50% of 1 million is how much? 150,000. 150,000, what do? Are you going to sell part of the gift and then go and pay to the GRA, or you have that 150,000 sitting in your account to go and pay? So the argument have been that there should be a reduction on that so that people can easily pay and be compliant. Okay. Then the last thing, we said that tax planning becomes essential. Yes. So you should also put in mind tax avoidance and then tax evasion. Tax evasion is negative. Tax avoidance is positive. And then as a practitioner, you should plan your tax so that you can be able to avoid tax. Okay. Now, note this: at the end of each year, individuals, including medical practitioners, are required to file a personal income tax, that is PIT. Okay. A personal income tax return to reflect their actual tax position. Okay, so this may result in either additional tax to pay or refund, that is tax credit, where excess tax has been paid. Yes. So what this point seeks to say is that the tax authorities have a portion at the authority that every individual at the end of the year, okay, so maybe we are in 2026 now. In 2025, you're supposed to go and file as a person. So maybe Dr. Isaac Yabua, you go to GR and then say that, oh, 2025, I earn a total of 200,000. Okay, my total expenses was 150,000. So my excess is 50,000, and therefore my tax is so much. Okay. So now when we know that so much tax, then we are going to look at how much your employers have already deducted monthly through the payee to the tax authority. So maybe if you're at the end of the year, your total tax liability that you are going to disclose to the tax authority is maybe 20,000, and then your tax that your employers have paid on your behalf already is 18,000, then it means you have to top up of 2,000. That is one scenario. On the other hand, if your computation at the end of the year is 20,000, and then total tax that have been paid to the tax authority is 23,000, it means that the tax, I always confuse it with the tax authority in Ghana, which is Ghana Revenue Authority, GRA. So the tax authority have to refund to you 3,000. But mind you, it is easier for the tax authority to demand an additional tax from you than you asking from the tax authority a tax refund. Okay. Now, when you are also going to file your PIT, personal income tax, there are three things that the tax authority is expecting from you. Okay. Income from your salary, income from business, income from investment. So salary, business, and then investment. So you put all of them together and then calculate your tax and then show to them. But practically, what it means is that it's very complex. It's very complex. And then most people will engage the services of a professional tax advisor to handle this. Because if you are earning only salary, I don't think it's necessary for you to demand to check that you have a tax credit. But if you are having business as well, it is possible that the tax authority will not take into consideration certain expenses. Because on a normal circumstance, taxes supposed to be on profit, and profit is your income minus your expenses. So if you think that there are certain expenses that the tax authority have overlooked or have not taken into consideration, then you prepare it and then demonstrate to them that, look, all these things are allowable expenses or justifiable expenses that you've not included. So include it and then give me my refund and let's continue from there. Okay. Like I said, the time is limited, so I will leave here for questions and then answers. Thank you.
Well, that was such a very, very beautiful session, Mr. Thomas. So at this point, we are going to have questions coming from among us. And I think you can see me now.
Yes, I can see you.
Great. So this was such a beautiful session. I got to know so much that I actually didn't know. But I do have questions as well. As healthcare workers, as doctors, pharmacists, generally, you said there is a particular kind of pedestal that the society puts us at because they believe we are where the money is at. They believe we have the money. So I'm going to give an example. You've gone for a wedding meeting, a funeral at home, and everything. Everyone is like, oh, how much is doctor going to give? How much is doctor going to give? Everyone is looking at your pocket like it's the heaviest in the room. So how do you deal with such a situation, minus hurting your pockets and minus how do you create a win-win situation in that point? Because as life progresses, this is going to keep happening to us a lot. So that is my first question: how to deal with the pedestal that society puts us at when it comes to money. Then also speaking from being in an African society, we are going to be at such okay, as an African, you're always going to face black tax. You're always going to face black tax. That is tax coming from your family. They're going to call you, oh, doctor, your sibling at home doesn't have this and this. People in the village are going to be calling you for that and that. How do you make sure that black tax also does not hurt your pocket? So those are my questions. Thank you. If you have any more questions, you can either raise your hand or put them in the chat. Thank you.
All right. Thank you, Doc. So I think I can put the two questions together. Maybe it's like society and then the black tax from family. Yes. Think about how much contribution have you received from this group of people during your building up to your profession. Okay. So even after the profession, you still have more to do. You need to take up specialization. You need to build your portfolio. You need to re-educate yourself. So money is never enough. Money is never enough. For me, what I would say is that give what you have. Give what you have. So far as you are able to do it, 1, 2, and then they see that, okay, this is your principle, they will keep you there. You understand? The same people who will be demanding and then expecting that so much from you. When you satisfy all those, and then the next 10, you are not able to satisfy them, these same people will be telling you that, look, he called himself a medical doctor. He doesn't even have a comma in his money at the bank. You understand? So it's up to you. Budget and know what will be enough. And then give what will not affect you. Yeah. Give what will not affect you. I've seen professionals who has gone for loan for somebody. I've told you before, personally, I've had that experience. You go for a loan for someone, the person will not pay. It is your name, you have to pay it. And you have to pay that for maybe the next 3 years, the next 5 years. It will take a lot of resources from you. Think about investing that in maybe even a treasury bill. It could become maybe double. You could double that money in 5 years. So sometimes you also need to be stingy a bit. To society, you might be stingy, but it is your principle, and then you are protecting yourself. Thank you.
All right. Thank you, Mr. Thomas, for answering those questions. Yes, but the minute you start giving and the next time you don't have the backlash there is it's very unwelcoming. At this point, I'd want to open the floor to the audience to ask questions. If you have any questions, please raise your hand and ask, or you can put your questions within the chat room. Yes, please. I see Mr. Bonimark has a question. Please go ahead and ask your question.
In fact, my answer already tired being up. Thank you, Dr. Finance, for taking us through this critical sickness. And I strongly believe the patients who are medical professionals here are able to appreciate your service.
Thank you.
I think just to comment on what you have just made on Dr. Angela's question, sometimes it's the perception and mindset issues with the doctors. And then when you're called by the title, you feel you're obliged to give a little more than, because you are attaching the title to the contribution you give. Now, that perception is two ways. From the community that looks at the doctors and engineers and so forth, and also you yourself as an individual, having that perception that since I'm a doctor, how will they see me giving $1,000 as opposed to giving $5,000 to this person? So does it hurt the person who is demanding with the mindset? No. Does it hurt you financially as a person who is having the mental attitude that, or the mindset that I am a doctor, so I must give a little more to prove my title? It hurts you financially, it hurts you. And when you don't do it, when you practice and then you put a limit to every contribution, say whether it's a church or a wedding, my limit is $50. That is $50. No goes on. So people will understand from that when you are there, even you yourself consciently, you will be at peace that my humble contribution is always 50 shillings or $50. I give, and I don't mind whether people are mindful about my title or they don't care. They look at the contribution as being little. Now I want to ask Dr. Finance. You told us that we should control money and we shouldn't allow money to control us.
Yes.
How will that happen when poverty have been controlling us innocently? And now that we have something that we should control, kindly throw a little more light there, because our doctors here like to party as well. So sometimes they go trying to, pay back. When poverty was controlling me, money was nowhere. So could you please throw a bit more light?
All right, thank you for your comments, and then thanks for your question. Yeah, so like you said, all those things, they are necessary, okay? partying is necessary to reduce stress, but how much of the partying is too much? That, as far as you are a professional, you should know. And more importantly, I think you should have a limit to it. You should have a limit to it to the extent that you cannot take a certain percentage. That is large of it for that. And then so far as you see that everybody, you are the party boy, everybody want to party around you, that is a problem. And you need to control that. And you see, once you develop the habit of investing, you shift your goal to that. You say that, oh, so look, I put in 1,000 and then I've gotten 1,200 within this period. Okay, but it means that if I double it up, then I'm getting maybe double of this. Okay, then even you see, once you are creating that money generating assets, then you could even be using a percentage of the income you are getting from the investment for your entertainment, and that will not affect you. You are even having more. So it all boils down to the issue of discipline. You just have to be disciplined and then control your expenditure, and then know when to say no. Know when to say no, and then go within you. See what you give that will not affect you. I hope I've answered your question. Thank you.
Thank you, Mr. Thomas, for answering that question. For sure, I think we need to know when to say no. It would save us from so much, and it would save you from something I like to refer to as lifestyle creeping.
Yeah.
This is basically the more money you earn is the fancier things you're going to want. Say
Yeah.
you're using an iPhone 15 and now you have some money, you feel like this is no longer my class. The phone
Yeah.
is functioning so well, you have extra space, the camera is good and everything, but you feel like, I want a better phone. So money that should have invested somewhere, put somewhere constructive, has gone into your lifestyle. So you need to know when to stop, when to say no for sure, when it comes to spending. Yes. So I'd like to get one more question or any question at all, and we can proceed to close the meeting.
Okay. So let me add this in that line. At Provita Hospital, I had the opportunity to work directly with the founder and the specialist. Okay. So this doctor, I observed him that he was using a small Peugeot car. Someone who was the first doctor to introduce IVF in Africa. And he was using Peugeot. So I was like, oh, maybe that is just for the day. 1 week, 1 month, 2 months, 3 months, 4 months is the Peugeot. Wow. You see? And this Peugeot he has been using it for over 10 years. So you can imagine, instead of buying the 4x4, those whatever big cars, he's using that and he's saving a lot, servicing, fuel. So you see, if you do that, it also affects your ability to pay. So it's like, okay, me, I'm the whole person owning this multi-million dollar investment, but I'm using Peugeot. This is how much fuel I use for the week. So if you come and then you say that you are going to do this, so give me so much, I'm like, no, I can't give you all of that. You see, and that is where it continues it continues from there. Okay. And then you should be more liquid. What I mean liquidity is that, you see, if you look at the asset aspect, you have properties, and then cash at your bank or investment. Liquidity, your liquidity is how easily you can able to convert your assets into cash, or how much of your asset is in cash form. So that's your liquidity. Thank you.
Oh, thank you so much, Mr. Thomas, for that extra point. So it looks like there are no more questions from the audience, and we can proceed to have. It looks like there is no more question from the audience, so I believe we can proceed to close the session. We can have a final word from Dr. Isaac. Yes, and we can close the session.
Okay, thank you so very much, Dr. Angela. Thank you goes to speaker for today in the person of Mr. Thomas Seboji. He's really dealt with the topic money, medicine, and financial empowerment. I've learned a lot, even as a medical doctor. I'm sure I can call myself an economist or someone from a finance background after listening to Thomas. Yes, it's been an exciting session today, and we also want to thank our staff who joined. I can see Bonnie on the call. I can also see Success. I can also see Joyce on the call. We appreciate your joining. We thank you so very much for taking time out of your busy schedule to join. So yes, over to you, Angela.
All right, so we shall also have a word from the rest of the staff, that is Success and Joyce. Thank you so much for coming. We are very honored to have you here as MSB. So, Madam Success, can you please say a word or two before you close?
Okay. Thank you so much, Angela. I I didn't join in on time, but I'm really glad that I joined, and I look forward to like watching the whole recording because whenever Thomas speaks on finance, something great is always coming out of him. So
Thank you.
I'm happy to be here. Thank you very much. Thank you, Dr. Isaac, for organizing this. Thank you. Bye bye.
All
All
right,
right.
thank you, Success. I think we can also hear from Madam Joyce. Can we also hear from Madam Joyce, and then we close the session?
I think Joyce dropped off the call,
Mhm.
so we can proceed.
Oh, all right. Okay, then. So thank you, everyone, for creating time from your schedule and making it for this session. I'm sure it has been worth every single second of your time. For sure, I felt like I was within an finance lecture for sure. And thank you so much, Mr. Thomas, for those words of financial empowerment. I got the equation: assets are equal to equity and liabilities. So it's at this point whereby I wish everyone to have a nice day and nice evening, and see you next time for the next session.
Thank you
Thank
very
you.
much. Have a great
All
time.
right.